In today's video, we are going to be learning how to trade profitably using the Fibonacci retracement. The Fibonacci retracement tool is used to identify support and resistance level during a trending market. Fibonacci retracement is only used when the market is trending. That is why before you can make use of this strategy, you need to understand the market structure. So understanding the market structure will help you to know when to use the Fibonacci retracement and when not to use it. Because if you use the Fibonacci retracement during a ranging market, you are going to get wrong signals. So that is why you need to watch out for trending market before you can implement a Fibonacci retracement tool. So for you to understand if a market is trending, you need to look at the chart, right? Candlestick pattern should be implemented. So you look at the chart to know what the market is doing. So most traders use the Japanese candlestick to be able to know what the market is doing. So with the Japanese candlestick pattern, you'll be able to read the market very well. So if the price is making a higher high and higher low, it means that the market is currently in an uptrend. And if the market is making a lower high and a lower low, it means the market is currently in a down move. So you need to look at the market structure to be able to know whether if the market is trending. And if the market is making series of highs and low, it means the market is ranging. So when the market is ranging, you should not use the Fibonacci retracement. You only use it when the market is trending. So what you do is you need to look at the highs and the low. If the market is in an uptrend, then you need to look at the lows. If the market is in a downtrend, you need to look at the highs. So what the Fibonacci retracement tool will do for you, it will help you to know when to enter a trade. It will guide you to know when to enter a trade. So if the market is in an uptrend, what you do is you plot out the Fibonacci retracement tool and connect from the lows to the highs, right, and extend it to the future, so that when the price makes a retracement and then reverse from the Fibonacci levels, that is when you are expected to place a trade, because the Fibonacci tool comes with levels, right? So depending on the particular levels that the market is respecting, that is the level you are expected to trade with. So my advice is for you to pay clear attention so that you understand what this video is talking about. So if the market is currently in an uptrend, then you need to look at the swing low, right? You connect it to the highs. And if the market is in a downtrend, then you look at the swing high and collect it down to the lows. So let me give you an example of what I'm talking about so that you understand what this video is talking about and how you can be able to make use of the Fibonacci retracement tool and trade the forex market profitably. So right now we are on the chart. You can clearly see we are using the trading view as our platform. So we are making use of gold, and this is the 15-minute time frame. So now you can clearly see that we are on a naked chart. There is no single indicator on this chart, right? This is pure naked chart. So for you to trade profitably with the Fibonacci retracement tool, the first thing you need to do is to look at the market structure to know whether if the market is trending or ranging. So if you look clearly, you can say the market is trending, right? You can clearly use your trend line and confirm it. You can see that the trend line is pointing down. So you can clearly say the market is in a down trend. So now we can confirm that the market is in a downtrend. So this is the perfect time for us to make use of the Fibonacci retracement tool. So like I said, the Fibonacci retracement tool helps us to identify a support and resistance level during a trending market, right? Because whenever the market is trending either up or down, it tends to make a retracement. So the Fibonacci retracement tool helps us to know when a retracement is over, for us to be able to enter and join the current trend. So that is what the Fibonacci retracement tool help us to do. So if the market is going down, the Fibonacci retracement tool help us to catch what? A retracement, right? Because when the market is going down, it will make a retracement up before the down move continues. So the help of the Fibonacci is to be able to tell us when the retracement is over, so that we can place our trade and join the trend. So now that we have confirmed that the market is clearly in a down move, the next thing we are going to do is to connect the swing high and then drag it down to the swing low and then extend it to the future. So now let's assume that this is where the down move began. This is where the down move began. So you can clearly see that the market is rallying down, telling us that the market is clearly in a down move. So now, if you want to trade using the Fibonacci retracement tool, you need to wait for a retracement. So if you watch clearly, you can clearly see that the price is making a retracement up, right? The price is making what? A retracement up. So we go to the tools. So we go to the Fibonacci retracement tool and then plot it out. So for the fact that the market is in a down move, we are going to connect the highs and the low and extend it to the future. So this is the highs and then this is the lows. So we're going to extend it to the future. So now we have connected the highs to the low and we have extended to the future. So we're going to look at these numbers, this 0.786, 0.618, 0.5, 0.382 and 0.236. So we're going to look at these levels to know the one that the price is respecting. So for the fact we have plotted our Fibonacci retracement tool, so we're going to watch to see which level is the price respecting. So you can clearly see that the price rallied down all to this level and then made a retracement. So we can clearly see that the 0.786 is respecting the Fibonacci retracement tool. So what we have to do is, once this candlestick, this red candlestick closes, we place our sell trade here, then our stop loss will be above the 0.786, then our take profit will be at the previous swing low. So this is where will be our take profit, right? So this is how you trade using the Fibonacci retracement tool, as simple as that. Okay, let me share another example with you guys so that you understand what I'm talking about. So like I said before, if you want to trade using the Fibonacci retracement tool profitably, you need to confirm if the market is currently on a trend, right, before you can make use of it. So if you look at this picture very well, you will see that the market is clearly in a down move, right? So this is the perfect time for you to make use of the Fibonacci retracement tool. So if you want to see that the market is making lower high and lower low, lower high and lower low, so this is the perfect time to make use of the Fibonacci retracement tool. So like I said, during a down move, you need to look at the highs and connect the highs to the low and then extend it to the future, right? So by so doing, the Fibonacci level will be plotted automatically. So you now have to watch to see what the price is doing, to see which level is going to hold perfectly and know when to enter a trade. So this is what you are going to learn in this video. So now if you watch, you see that the price is going down and then now makes what? A retracement. So now this is the swing high and this is the swing low. This is the swing high and this is the swing low. And like I said before, during a down move, you need to connect the highs and drag it down to the low and then extend it to the future. Then you watch to see which level the price is respecting. That is when you are expected to place a trade. So what you do is you simply plot your Fibonacci retracement tool and then drag it from the swing high down to the swing low and then extend it to the future, right? You plot your Fibonacci retracement tool, right, and drag it from the swing high down to the swing low and then extend it to the future. So once you have done that, you now wait to see the reaction of the price. So if the price is retracing up, you need to exercise patience, right, to know which levels that the price is going to bounce off from. Because once you plot the Fibonacci retracement tool and then drag it from the swing high to the swing low and then extend it to the future, the Fibonacci level will be plotted automatically, right? So these are the levels: 0.764, 0.618, 0.5, 0.382, 0.236. So these are the levels. So these are the Fibonacci levels, right? This one, this one, this one, this one, this one. So these are the Fibonacci level. So what you have to do is, since the price is now making a retracement up and you have already plotted your Fibonacci retracement tool, you need to exercise patience and wait to see which level is going to hold firmly, right? So if you watch, you see that the price now rallied up, and when it got to the 0.5, that is 0.50, the price got rejected. And what happened? The price now started rallying down, right? You can see this long red momentum candle telling you that the sellers have stepped into the market again and they are going to push the price down. So once you see this long red candlestick, you know fully well that this 0.50 Fibonacci retracement level is holding onto the price, and this level now acts as what? As a resistance level, right? So you can clearly confirm within yourself that this level is a resistance level, because this is the level that every trader is looking at. So that is why when the price got to this level, it got rejected and began to rally down, because other levels price broke above it. You can see the 0.236 price broke above it, then came to 0.382 price broke above it, and when it came to 0.50 price got rejected and formed this wick, right? Then after that, the price now rallied down, forming this long red momentum candle, telling you that the selling pressure is still intact. The sellers are still in the market. So what you have to do, you have to wait for this long red candlestick to close, and once it closes, you simply place a sell trade and your stop loss will be above the 0.50. Or once you sight this rejection, you can simply wait for this green candlestick to close, then you place your sell trade at the close of this green candlestick and your stop loss will be above the 0.50, right? Then what will be your take profit? Your take profit will be at the previous swing low. So this will be your take profit. So when the price now rally down, it will automatically smash your take profit. So have it at the back of your mind that if you wait for this long red candlestick to close before you place your sell trade, have it at the back of your mind that if you wait for this long red candlestick to close before you place a sell trade, have it at the back of your mind that your stop loss will be above the 0.50, and this will make you to have a lower risk reward ratio, because you will not be able to make more profit because your stop loss is too wide, right? But if you wait for this green candlestick to close and you place your sell trade at the close of this green candlestick, then you have a tighter stop loss, and this will increase your risk reward ratio, right? Because you are going to make more money, right? You are going to risk small to make more, because if you place a sell trade here, your stop loss will just be above the 0.50, right? Just like 10 pips or 20 pips, while your take profit will be here. So your take profit will be like 200 pips or 300 pips. So this amounts to 1 to 10 risk reward ratio, meaning you are risking 1% to make 10%, right? So risk reward ratio is also very important. So for those traders that are scared, they might decide to wait for further confirmation, because this is what we call the bearish engulfing pattern. Some traders may wait for further confirmation, like candlestick pattern, like this long red candlestick is what we call the bearish engulfing pattern, because the red engulfs below the green. So they need to wait for this bearish engulfing pattern to form before they place their sell trade. But by so doing, they have to know that their risk reward ratio will not be great as the traders that place their trade at the close of this green, right? But the people that place their trade at the close of this red are scared, because they don't want the price to go against them. They want to be sure, they want to confirm that the sellers are active. But the people that place a sell trade here knows fully well that for the fact that the price got rejected from this 0.50, they have the confidence that the price will not break above this 0.50. So like I said, everything in forex trading is all about probability. There is no perfection. Everything is all about probability. So like I said, your stop loss will be above the 0.50 and your take profit will be at the previous swing low. So this is how you trade the forex market using the Fibonacci retracement tool. So this is how you trade the Fibonacci retracement tool profitably. Like I said, the Fibonacci retracement tool can only be used during a trending market. It can be in an uptrend or in a downtrend. Don't ever use it during a ranging market. Honestly speaking, there is no 100% in trading. Right? Trading is all about probability. So it is always advisable that you do your own diligent study and analysis, right? Backtest this strategy on a demo account to know which one that actually works for you. So if you are 100% sure that the strategy is working for you, then you can now use it on a real life account. But have it at the back of your mind that money management and risk management still remains the best thing in forex trading. So once you are making use of any strategy, always have it at the back of your mind that you need money management and risk management to survive in the forex market. So ladies and gentlemen, that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Enjoy the rest of your day. Bye.